Smart money concept is actually a rule-based strategy you have to follow, and it's very simple, but only after you understand market direction. If you don't know whether the market is ranging in a buy trend or a sell trend, trust me, SMC, which is also called smart money concept, will always confuse you. That is why before this video, I recommend you watch my uptrend and downtrend video, because I've explained everything in detail so you can understand and follow through. Once that foundation is clear, trading smart money concept becomes structured and straightforward. What's up, traders? Welcome back to Palmist. If you're new here, this channel is all about smart money concept, market structure, and trading forex with clarity, patience, and discipline. No hype, no signals, but real education. If you're tired of random entries, overtrading, and confusion, you are in the right place. One of the biggest problems traders face is this. They jump straight to the lower time frame looking for entries without understanding what the market is actually doing. And when you do that, every move looks like an opportunity, and that's how accounts get blown. So today, I will show you how I simplify the market using 3 time frames, such as the daily for direction, the 15-minute time frame for confirmation, and a 5-minute time frame for precise entry. But before we dive into the chart, remember, smart money concept is a rule-based strategy. That's why it's so important to follow the sequence I'm about to show you. As we go deeper, I will explain exactly how I use this time frame to build a precise, consistent trading strategy. To trade smart money concept successfully, you must follow through these steps that I'm giving you to understand it very well. First, you must understand market direction. You can go watch the in-depth analysis on my channel to understand proper uptrend and downtrend and how I determine my overall bias. The market structure, higher highs and higher lows, is also well explained in my previous video. With all these components, as long as you understand them very well, trading SMC concept will be as easy as ABC. But if you don't understand this concept I'll be putting together, trading the strategy becomes so difficult. So let's dive in so I can explain what is called break of structure, change of character, point of interest, and how I use the multi-time-frame analysis, putting all these components together to get my trading strategy so as to become a successful trader. So today, I will show you, before I start explaining smart money concept, I want you to understand something very important. Everything I'm about to show you is rule-based. There is a sequence, and if you skip any step, the strategy will not make sense. Because smart money concept does not start with entries. It starts with market direction. So on this chart, I'm going to use an uptrend as my example. And if you already understand uptrend, just remember this. Everything you see here applies the exact same way, just in the opposite direction. I want you to forget indicators, forget signals, forget trying to predict the market. We're simply going to react and read what price is already doing, one step at a time, one rule at a time. Step 1, market direction. So the first thing I look for on the chart is not an entry, is not a setup, is not even smart money concept. It's the first question, which is very simple. Is the market trending up or trending down, or even ranging? If price is making higher highs, breaking structure to the upside, higher lows, and the lows are not taking out the next support, then the market is in an uptrend or a buy trend. If price is making lower lows, lower highs, breaking structure to the downside, BOS to the downside, that means the market is in a downtrend or sell trend. That is market direction. No guessing, no complication. Mechanical rules. Price waving down, breaking lows to the downside, or waving up, breaking highs to the upside. And once direction is clear, everything else becomes easier. We'll move to step 2, which is market structure. Now let's talk about market structure. Market structure is simply how price behaves within that direction. In an uptrend, I want to see a structure breaking highs to the upside, just like the figure you're looking at. Price is breaking structure to the upside. Price creates higher highs, higher lows. You simply mark the BOS so you can see it visibly to avoid confusion. As long as this structure is respected, buyers are in control. This is not yet about the entries. And again, in a downtrend, just like what you're looking at on the chart, is the exact same opposite. Price breaking lows to the downside. We move to the third step, which is BO or break of structure, which means trend continuation. In an uptrend, break of structure happens when price breaks the previous high, just like what you're looking at on the chart. Price breaks the previous high. This is the high. Price has to break it and close above it. That is the meaning of break of structure. It has to break the previous high and close above it. It confirms the continuation of trend. It breaks the previous high and closes above it. That tells us the market is in a strong bullish trend. It is also the same for a sell trend. Price has to break the previous low, which is this. Pulls back, breaks the previous low, which is this. Once that is confirmed, this tells us one thing only. The trend is continuing, either in an uptrend or in a downtrend. Mechanical rule: BOS equals to trend continuation. BOS is not an entry signal. It confirms that the direction is still valid. In a downtrend, BOS happens when price breaks the previous low. Step 4. Change of character. Now this is where many traders get confused about change of character. Change of character means in an uptrend, change of character happens when price fails to make higher highs and then breaks a higher low. This tells us the market may be losing bullish momentum. Change of character simply means possible price reaction, not confirmation. Change of character do not mean sell immediately. It means something is changing. Pay attention. In the downtrend, is the opposite. Price breaks low. So let me explain this on the chart. Change of character simply means price are breaking highs to the upside, break of structure. There's another break of structure. But if price pulls back and fails to make a new high, but instead decide to break the low, this very place is a change of character, telling us that this bullish trend is changing to a sell trend, or clearly this uptrend is changing from an uptrend to a downtrend. Let me make this clear. BOS tells us the trend is continuing. Change of character tells us the trend may be changing. Now that we understand market direction, market structure, change of character, the next question becomes, where do we actually look for trade? That's where point of interest and multiple time frame comes in. Smart money trading is not hard. What makes it hard is keeping step. That you must understand. Step number 5, point of interest. Point of interest is simply the support or resistance level where the price reacts from. It's as simple as that. Let me show you on the chart so you can understand what I'm saying. So point of interest is simply the market making higher highs, higher lows, and there's a break of structure on the side. The new high is broken. So how do you know where market is going to react from? That's an imbalance zone. Market is going to retrace to an imbalance zone. That zone is called point of interest, which is clearly where price reacted from. There's always a clue. When I go on the chart, I'll be able to explain better. We call it an imbalance zone. This zone here was able to break the structure. So in most cases, price reacts back to that zone. Once price gets back there, that's called point of interest, and that's a higher probability that the market is going to turn from there. Step number 6 is combining the multi-time frame model, like the daily chart for direction, the 15-minute for confirmation, and the 5-minute for entry. Why point number 7, which is the most important, is risk management, small risk, high discipline. In my own kind of model, I like the ratio 1:3, but when I go on the chart to explain this, I'll tell you how I set this up. If you follow these 7 rules that I've just mentioned, while trading smart money concept, I'm positive you will be successful. So let's recap. Number 1, market direction. It's very important to know what the market is going, the directional bias. The market is uptrending or downtrending. Market structure. In understanding the market directional bias, you need to know maybe the market is making higher highs or higher lows. That is very important. Understanding this helps you understand what the break of structure is. If maybe the market is breaking to the upside or to the downside, it's very important. So once you understand that, even if the market is changing direction, which is called a change of character, you'll be able to understand this, seeing that on the chart. Then the point of interest. In trading smart money concept, once you put all this together, you'll be able to know where the market is going to retrace to. And once you apply your simple rules, your ratio 1:3, you don't need to look for a higher target. A very simple target is enough, and you keep doing it consistently, you'll be profitable long term. With that being said, this is how I do my own smart money concept analysis. Once we move into the chart, I will explain how I put them together to have a good trading strategy. Every good trader starts with a story. Higher time frame, like the weekly, the monthly, the daily, tells us the directional bias. But the problem is, not every trader knows how to interpret this. So I'll be doing that so I can explain the full SMC concept, how I do mine. For my strategy, the daily time frame tells me who is in control, buyers or sellers. How do I do that? Once I open up a chart, I'll be using a chart of EURUSD to explain this. So what I do is, it's very important to know the extreme high. That is very important for me. Once I determine the extreme high, I will also determine the extreme low, which is this. Once that is sorted out, interpreting the chart becomes easy. All I need to do is just to see only the extreme highs and extreme lows. So clearly looking at this chart without being confused, I can see that the market is clearly breaking highs to the upside. From what you can see, without guessing, it's breaking highs to the upside, BOS to the upside. So what is today's story? If you can watch, getting a clear break of structure, price must break the recent high to confirm that's truly a break of structure. So once you label your chart like this, it becomes easy to interpret. So seeing this without guessing, this is clearly in an uptrend. So here is where the trick comes in. Now that I understand that the market is buying, all I'll be looking for is a bullish signal. But before that, I need to get a full story. Now, understanding that the market is in a buy trend, how do I know the point of interest the market will be reacting for? As an experienced trader, it's very understandable when we are able to predict a zone where the market will be reacting for, simply because we've seen this happen often and often. But if you are a newbie, it will be very hard. So now, this is the support that caused the break of structure, which is this very place. The big players always leave clue, and this is the clue. This is an engulfing candle that engulfed this candle in here, telling us that the big players' presence are much in here. That tells me that they will be able to take out this high. Not just that, it tells me another story that if truly buyers are in here, they should be able to defend this zone. That's why we call this candle an imbalance zone. So understanding this, I have an idea of where the market will be returning to, which is an imbalance zone. So let's see. I'm going to put this chart in a replay mode so you can see I'm interested in that imbalance zone. Once price sweeps this liquidity below this place, I'm very interested in it because this engulfing candle tells me the big players are in here. And that's how I know that the market should be able to take out this liquidity and hold on this very price in here. Let's see how it all plays out. As you can see, ahead of time, I can predict or have an idea of where price should retrace to, which means all this liquidity should be swept. I love taking the last one. Gives me an idea that the next imbalance zone or other block will be able to hold price. Now that price is at my point of interest, what I do is go to 15 minutes, identify my point of interest from my time frame on 15 minutes. All I need to do is wait for the market, identify the BOS and breakup structure. This is my BOS, the downside. What I'm waiting for is for the market to take out this high. Once the market takes out this high, which is my change of character, that tells me that the market is transitioning from a sell trend. If you can watch what the market is doing on 15 minutes, clearly in a downtrend, breaking structure to the downside. But because my daily bias is buy, so all I'm waiting for is for this market to change character to the upside. Once that happens, then the daily buyers and the 15-minute buyers are saying the same thing. That means I'm good to go. That's my break of structure. I'm waiting for the market to take out this high. And once that happens, tells me that 15-minute and daily time frame is saying the same thing. So let's see what happens. So now, once this happens, this tells me that the 15 minutes and the time frame is saying the same thing. So what I wait for most cases is for the market to pull back to an area of imbalance, which is somewhere here, before I will now look for the same thing on 5 minutes. But on this chart, it did not happen. But this is exactly what I actually look for. So I actually wait for the market to come back to a point of interest. But with that being said, this did not happen, so probably I might miss this trade. But let's continue our analysis and see where we're going to look for a good entry. So now, understanding the daily buyers, I know that the market is buying. So what I do is I wait for another break of structure, which is this, clearly telling me that the market is in a buy trend from the daily buyer. So how do I know where market should retrace? It should come back to an area around this zone, or sometimes I use Fibonacci. This is where experience plays in. I use Fibonacci to confirm the pullback zone. So I have my two levels here, 78.6 and 86.6. So I'm good to go. So seeing the market coming back to this zone tells me that I can look for a buy entry on here. So now that I've identified my point of interest on 15 minutes, basically all I need to do is repeat the same process that I've been doing from daily time frame to 15-minute time frame, and now on my entry time frame, which is my 5-minute time frame. So once I come to my entry time frame, I want to identify the BOS, which is this, and the break of structure. All I will basically be waiting for is a confirmation for the market to break this structure and probably do something like this. A retest to the imbalance zone, the demand zone where I have a presence of buyer. So let's assume I have this setup after the market has broken structure to the upside like this. Follow the arrow so you can understand how I do my entry. Has broken structure to the upside. What I'm waiting for is for the market to retest my point of interest, which is my imbalance zone. That point on 5 minutes will be my entry. Then my target sometimes will be ratio 1 to 3 or 1 to 4, and my stop loss is very minimal. So what I do is, if this is my entry, then I look for a ratio sometimes 1 to 5, and my stop loss is just very low. So once the market closes above this range of character, I let the market retest my point of interest, which is area of imbalance or fair value gap. After sweeping liquidity, it makes it more stronger. So I look for a ratio 1 to 5, 1 to 4. It all depends on how I project the trade. Basically, that's all I do, and that's how I set up my smart money concept. In my next video, I will be putting up more analysis so you can understand and follow through how I do my strategy. If this video helped you understand smart money concept better, please subscribe to Palmist FX, like the video, share, drop your questions in comments section, and share this with a trader who keeps over trading. Trade with structure, not emotion. This is Palmist. I will see you in the next video.